So today's program is a very important program because Buffett, who has badmouthed gold for years, and it was tough, because what Charlie Munger says, it says, I can't imagine a worse, his partner, Charlie Munger, who's 96, I can't imagine a worse crowd to deal with than a bunch of gold bugs. And I've been a gold bug since 1972, and I've been a silver bug since 1974. And the point here is this, Kim and I just held our course. We'll let these old guys tell us all this stuff, but we still have to have our own belief in yourself here. So now these two old guys, 90 and 96, they're eating their words. They're 560 billion or 560 million, more than my number, to buy Barrick gold. So they're shifting into gold, dumping bank stocks, even as J.P. Morgan and Goldman Sachs, and dumping airline stocks. So the question is, what does that mean about the future? What are you going to do? If I just tweeted this morning, if two old guys can change their mind, what are you going to do? And we're talking about what does this mean? Any comments, Kim?
Well, we at the Rich Dad Radio Show bring on people that are smarter than us, and we have that guest today with George Gammon. And he looks at the macro, and he keeps it simple, and he uses pictures, and he's a real estate investor, entrepreneur. But at the last segment, we were talking about different scenarios of what can happen, which direction we can tighten our belt, we can go to inflation, we can go to war. So, right. George, what give us your overview picture, your opinion. What do you see? Where are we going globally?
Well, if history is any indication, the government will choose inflation out of those. So if we look at what the average person can do, you see that in times, going back to the early 1970s as an example, you see a rotation out of financial assets into hard assets. And I would use the stock market crash of 72 to 74, and then you had this huge commodity boom in the 1970s. I think that's what Buffett is seeing. And I personally, that's how I'm positioning my portfolio. And there are no certainties, but I think that if you look at the probabilities and you understand what's going on, that's the most likely outcome when all things are considered, when you look at the amount of government debt we have, and you look at how much deficit spending they're doing right now with the stimulus packages and infrastructure spending and everything else that we see in the news right now.
Munger says, I wouldn't hang out with a bunch of gold bugs. Well, I wouldn't hang out with those guys either. My friend just loved to go to Buffett's annual Love Fest. I don't know, it's in Omaha. I got nauseous thinking about it, simply because, George Gammon, Kim, and I, we're investors. We don't want two old guys managing our money, because when they lose our money, and they have lost their money, we don't know anything. Do you know what I mean? If I lose my money, I have a chance of getting smarter. That's my message.
Right.
But if you turn it over to a fund manager or an ETF and all that stuff, you don't learn anything. But the other question is, one thing that Buffett called Bitcoin rat poison. Now, I don't know if he's bought Bitcoin yet, but what's his name? The guy?
Paul Tudor Jones.
Yeah, Paul Tudor Jones is a pretty smart dude. The point here is this. The old guys are changing their minds.
That's right.
And the young guys have already changed their minds, because I was talking to my friend. I said, Kim and I grew up playing Monopoly with fake money, and the millennials grew up playing with cyber money. So we have two complete generations coexisting. We have old guys who buy treasury bills. I won't touch those things either, but I have gold and silver, so it's hard for me to hang on to gold and silver when Munger and Buffett were trashing it. And now I also own Bitcoin because Paul Tudor Jones owns it. But right. Because the millennials grew up with cyber money. So the reason I'm talking to George is because you're an expert on the past, but I want to know because you're hanging out in St. Bart's, also, obviously you see something. I want to know what you think about that. If Buffett says Bitcoin is rat poison and he calls gold worthless, and Munger wouldn't hang out with a bunch of gold bugs, and I wouldn't hang out with him, dial that into your brain. What does that say to you?
Well, it says to me, you got to listen to, or you got to watch their actions and not listen to what they say first and foremost, because regardless of what they're saying, if they're out there buying a gold miner, and I'd like to point out too, Robert, they're not just buying gold, they're buying a gold miner. So why is that different? Because when gold goes up, gold miners go up a lot more.
Right.
And when gold goes down, gold miners go down a lot more.
Explain that. What do you mean by that?
Well, so let's say gold goes up by 10%, or let's say it goes up by 100%. It's at maybe $2,000 right now. Let's say it goes up to $4,000. So it goes up by 100%. If that were to happen, most likely the gold miners would not go up by 100%. They'd go up by 400%.
There's more
They'd go up by
leverage in it.
1,000%.
Yeah, there's more leverage in gold miners.
That's right. That's right. So you have to look at Buffett not only buying gold, going long gold, let's say, but he also is going long gold with leverage. And I'd also like to point out, you said about 560 million, but that's all we know of. And he's not going to buy at one time because he's going to move the market. So since then, Robert, he could have bought a lot more that we just don't know about yet, that we'll find out in the future.
So George, this is my point. The reason you're on this program is dialing into your brain, because this is what Rickards calls Bayesian. You know, you can only make a decision based upon what's happened. And when something changes, even Keynes, the economist, said that he'll change his mind when the facts change. So the facts just changed, is that Buffett just started getting into gold, dumping financial stocks and airline stocks. So that's Bayesian would say, what would you do now? So you hauled ass to St. Bart's, which I think is smart. And if you were speaking to our listeners right now, or viewers right now, if two old men, 90 and 96, can change their minds, and we have people sitting like, Harry Dent's recommending T-bills, and we have all of these. I see your face.
Harry Dent's saying gold is going down to 1,000, right?
Yeah, and Rickards is calling
I hope so, because I'd love to buy more.
Buy more, yeah.
So Rickards is calling for $15,000 gold, and Schiff is nuts. I interview all these guys, and you're included now in the rat pack there.
Yeah.
We all value your opinion. The facts are the facts. Right now, this is Bayesian. I mean, Buffett dumped financials, and he's buying gold. So dial that into your brain. What does that mean to you? What would you say to the listener right now, the Rich Dad fan?
I don't like to say it, but I think it's just factual that we're going to see a lot more political unrest. We're going to see social unrest. There's going to be a lot of volatility in our society, in the developed world. And that means it's good for gold. I mean, we talk about inflation all day long, but gold does well in a lot of different situations. And especially when you have a lack or loss of confidence, not only in fiat currency, but in the system in general. And so I unfortunately, I hate to say it, but that's what I see in the future. I mean, I was just in the United States for a brief period, and people were angry with each other. They had all these plexiglass up at the restaurants at a curfew at 10 o'clock in Florida. And I went out of my hotel without, I had the mask just down on my mouth, right? And I was walking out of the hotel. Some guy that's 30 feet away from me is screaming at me to put the mask on. I mean, this is a divisiveness that I have never seen in American culture ever. And I don't like that. I don't think any of us really like that. But if you really kind of are honest with yourself, I think it's going to get worse before it gets better. And if it gets worse, especially with fiat currency, you're going to want to own something that's not only a hard asset. I mean, I really like commodities right now. I think they're extremely cheap.
And what other commodities, George?
Copper.
Agriculture. I like oil. I think that copper is very interesting right now. I think uranium is interesting. But also when you look at gold or silver as just money, you want to own something that's held its value for over 5,000 years. Then you're talking about Bitcoin. Wouldn't that be really interesting if people move more and more towards Bitcoin like they have in China and in Venezuela, where they lose confidence in the system or the currency. But the really cool thing about Bitcoin is you've got a fixed number of units at 21 million. And I would argue you're going to have fewer and fewer units because people always lose them. So
Schiff lost his money.
Yeah.
Schiff lost his, and immediately he doesn't like it. He calls it rat poison too.
Yeah, but it's this money supply that's shrinking instead of this fiat currency that's expanding exponentially, like we showed on those charts. So
okay, so George, let me ask one more question. So
yeah.
Harry Dent, who's an old guy like me, like I said, we grew up playing Monopoly and paper money, and I've never trusted paper money. That's why I own gold, silver, and Bitcoin. You know, Kim and I have lots of gold, silver stored all over the place.
Yeah.
We don't have paper. Now, a guy like Dent, who's an old guy like me, he says buy treasury bills, and I saw that little smirk come across your face because you're kind of in between us. Look, we're not saying any of us is right. I just want to hear your opinion. So Dent says buy T-bills because they're a lot safer than gold and silver. What do you say to that?
Here's the problem with that mentality, in my opinion. I've got a ton of respect for Harry, but you know, I'll disagree with people if I disagree. And I think the problem with that thinking is you're trying to predict what's going to happen with the price in the future instead of right now looking at the landscape and just saying what's cheap and what's expensive. And like Jim Rogers always says, if you just buy things when they're cheap and sell them when they're expensive, or just buy low, sell high, at the end, that's what we all want, and that's how we're going to be successful. You don't get too cute with it. You know, it's the KISS formula. Just keep it simple, stupid. And if we just keep it simple and buy what's cheap and buy low, sell high, and what's cheap right now is gold, silver, Bitcoin, and commodities, and then we don't worry about the rest, I think in the long run, everyone, including myself, is going to be a lot better off with that type of mentality.
So, personally, are you holding gold, silver, Bitcoin?
Not silver, gold, Bitcoin, commodities, uranium. And fortunately, I bought back in March. I bought a lot back in March. I bought gold miners as well. But I want to make a point there that even in March, I had no idea if they were going lower. I had no clue. In fact, I thought, yeah, they're probably going lower. You know, I bought oil or some of the oil producers when oil was really crashing, and I thought, I didn't know it'd go to negative 40 a barrel, but I thought that it would go lower. But I still bought right then. Why? Because it was cheap.
So
right?
How do you buy commodities? Kim and I started a gold mine in China, which they confiscated, and a silver mine in Venezuela, which we still have. But how are you buying oil? Because we invest in oil producers.
The producers.
Oil explorers, should we say.
Yeah. Yeah.
Well, I buy copper and uranium and all that stuff.
Yeah, I'm not buying the actual commodities. I should have made that clear. I'm just buying the producers. So I'm just trying to go along the underlying commodity or asset by buying the companies that benefit from that because they own those assets in the ground.